On. Yo, what's good, people? It is. Let me just close my close my wardrobe. It is currently 13 minutes past 10 p.m. UK time, Sunday, the 13th of July, 2025. Welcome to another amazing episode of Technically Speaking, which is a free weekly crypto stocks macro webinar hosted by myself, Fadlan Effendi, aka Ninja T, one of the founders of Blockchain Sensei, which is a Black and Asian owned Web3 solutions and financial literacy education company. Before I get started, I would like to iterate that nothing in this video is financial advice. I do not intend to be perceived or received as a financial advisor. I have no financial credentials. I don't even have a degree. And you should always do your own research. You should go to multiple different sources, listen to multiple people, and then find the bits that work out for you and then apply it to your life relative to who you are. Because there is, much like there is no two rappers and singers that rap the same, there's no two traders and investors that trade the same. The way I trade and or invest may not be suitable for you. Yeah, let's get started. Oh, before we get started into the juicy, just know this webinar is every single... Oh, 1 second. Okay, so I'm having a lot of technical issues right now. Close this. Come on. Don't do this to me, computer. Don't do this to me. Okay. Okay, can everyone still hear me, yeah?
Yeah.
Okay, perfect. All right, let's start with some macro. So, for those that are new, let me tell you about this website that the Matrix doesn't want you to know about. The website is tlx.figisolutions.net. Now, this website basically measures the available liquidity in the Fed, so the American government. All you got to know is not on a day-to-day or hour by hour or ultra short degenerate time frame. In the mid to long term, this correlates with price action because as liquidity goes up, as in the available dollars the Fed has to invest in assets goes up, generally speaking, is the direction of particularly risk on assets, which is crypto and tech stocks, right? So that's liquidity. One of the reasons, now there is always multiple reasons and catalysts why the market goes up, goes down, or is stagnant. The most important thing that you must understand when it comes to market cycles is liquidity. How much liquidity is in the system, right? So one of the reasons why we've had a climb in price is because we've had a climb in liquidity in the Fed, going from 5.7 trillion at the end of June to now 6.2 trillion. So this is a website that I like to go on every single day. And the TGA is the savings account, which has an inverse relationship to liquidity. So when the TGA typically slides down, liquidity typically goes up and vice versa, right? So we can see here that savings in the Fed since the start of this year, 13th of January 2025, obviously it's the other way around because it's American, has been sliding down, and this has been one of many catalysts for the market going up. Now, why is this important? This is important because if I see at some point there is a liquidity drain, which at the moment seems to be a seasonal trend at the end of the month, I won't do it now live on call, but these drains in liquidity typically, as of 2025, has gave an end of month seasonal trend of price action pullback. Okay, then we have the reverse repurchase agreement. Without going into too much of what this is, this has an inverse relationship to liquidity. So as you can see in these spikes here, liquidity has been drained. So TLDR, it seems like liquidity is trending upwards, which is one of the reasons why our risk on assets are going up. Okay, let's have a look at tweets that I posted in the past 9 days. I'm actually recently going on a business mentorship course by a guy called Moneybag Yo. He's in Andrew Tate's ecosystem. And I'm trying to remove ums and arms within my speech. So that's me pulling myself up and holding myself accountable. Okay, so here is a chart from Stock Money Lizards. Ooh, who's here? Cam's iPhone. Yo, 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 Cam's iPhone. Who's this?
Get up there.
Wait, is that Flower Market?
Get up there.
Yeah. Flower Market, yeah?
Nah, bro.
Oh, it's Krog, it's Krog, it's Krog. Yeah, yeah. We got Alien in the place. We got Donny Stone, we got my boy Toby. All right, cool. So
Man's like.
come on, G. Come on, G. So this is remember, guys, you do not want to attach yourself to one data set. I want you guys to all promise yourself. In fact, here is a market mantra. Let me just come on camera to say this, yeah? A market mantra that you can say to yourself to increase your conviction is that you will always cross-reference with at least 10 sources. So I'm just giving you guys different sources of information which may or may not be correct, but it's these data sets combined with my experience plus back testing, which I cannot stress more, back test, back test, back test. The more you back test, the more you look at what historically happened, the less you will be surprised in the future when there is a spike and or crash. And even how quick things reverse, right? Like in recent history, we had a huge market crash because of the tariffs. How quickly did that reverse? How bullish or bearish were you during the time, right? The markets are about trying to make best use of information that we have. Anyway, as we can see here, on this specific model, it basically shows that we are very, very far away from the top. And this Bitcoin price and Satoshi meter posted by Stock Money Lizards has in 3 previous cycles showed the top. Okay, so what else? Okay, so as I said at the start of the webinar, the most important thing for you guys to know and study is liquidity, right? Some of you guys may get lost in the whole 4-year Bitcoin halving cycle. It's semi-true, but the reason why Bitcoin goes up and down in bull markets and bear markets every 4 years approximately is not to do with the cycle. It's the fact that the Bitcoin halving cycle is in line with the approximate 4-year liquidity cycle, which is in line with the 4-year change of US presidency, right? So cross-border capital, they publish a lot of stuff with regards to liquidity. And the latest post TLDR is that we're on a risk on environment. Risk on environment basically means there is more liquidity available in the system, either through getting rid of government savings accounts and or quantitative easing, and also increasing things such as debt ceilings. Where was I? Okay, so this is an interesting screenshot. I'm currently going through Professor Adam from the Real World's Crypto Masterclass, and I am about 55% the way through. This is an interesting data set which shows the correlation between as when more and more people search for Bitcoin prices, it tends to lead to higher prices. Well, not lead to higher prices. Sorry, my bad. Have a correlation too. Now, if we go right now to Google Trends, which is one of the easiest ways to judge sentiment, I bet you crypto and Bitcoin is still not that high. Okay, right, here's some data sets from Wall Street Trapper. So Wall Street Trapper does a show called Trapping Tuesdays. I usually catch up with this on Wednesdays. Something to be aware of. America's key partners make up for about 75% of all US trades. We can see here that, to be fair, this information is now 4 days old, and it seems like the tariffs have been worked out, else the markets wouldn't be so risk on. Let me tell you one of the best things I found from this 3-hour webinar. I watch these webinars so you guys don't have to or need to as much. Basically, to summarize all this information, since 1950, where the S&P has had a year-to-date return of 5 to 10% within the first 2 quarters, so Q1 and Q2, there was a 93% chance of the S&P 500, which is extremely correlated with crypto, that's the top 500 US tech stocks, 93% of the time when the S&P 500 did 5 to 10% year to date within the first 2 quarters, which includes the first 2 quarters of this year. Don't know what's going on with my trading view. Let me reload the site. There was a 93% that we closed the final 6 months higher. So there's a 93% chance that we're bullish in Q3 and Q4. Goldman Sachs, one of the biggest asset management companies in the world, have raised their S&P 500 end-of-year target from 6,500 to 6,900. The S&P 500 right now is at 6,259. Right, what I'm going to do is I'm going to leave on my phone. 1 second. Yo, can you guys still hear me?
Yeah.
Perfect. All right, let's get cracking. All right, hopefully it'll be less laggy as well because I'm off cam. So we've got a 93% chance of a continued bullish rally in the next 6 months. That's fantastic to hear. Okay. Now, there is many forms of analysis. One of them is seasonality. So seasonality takes a time period, usually 1 month to 3 months, and it gives an average of return. So from 1928 to 1923, so 80 years of data, the S&P 500 has typically in July produced a 1.71% return, i.e. July has been the highest performing month historically in the S&P 500. Will this be reflected in crypto? I think it's already been reflected in crypto in the first half of this month. There is something called the Big Beautiful Bill, and it's an 887-page tax and spending law that just passed Congress and was signed in law on the 4th of July. It basically extends Trump's 2017 tax cuts, slashes health and food programs, boosts border and defense spending, and raises the debt ceiling by 5 trillion. The debt ceiling being raised by 5 trillion, that means that more money needs to be printed, because for debt to be printed, there needs to be money that's printed. Basically good for risk on assets. I believe that Trump right now is trying to encourage more people to come to the USA, as countries such as Dubai has seen a large influx in millionaires, and countries like the UK seen large exits of rich people. Because there's going to be so much exemption in taxes, guess what? This is going to be more money available for risk on assets. Tax breaks for high states. Before you could deduct up to 10,000. Now you can deduct up to 40,000 for the next 5 years. Where do you think this money is going to? Into the damn market. Into the market. All this spending is basically saying we're going to print. Bad luck for Tesla. There's going to be a green energy programs cut. Exit, for the record, myself and clients and my ecosystem all exited Tesla. What else? Okay, so the AI wars. Mark Zuckerberg has been taking the top AI executives left, right, and center, from OpenAI to Apple, taking their execs and offering them 8-figure salaries with equity. This is one of the reasons why Meta has been absolutely soaring. Mark Zuckerberg, the real gangster. There are now over 100 stocks from the USA that are valued more than $100 billion, more than $0.1 trillion. And how many stocks are worth more than 100 billion ranked by country? The USA has over 100, and China coming second with 20. This is one of the reasons why I do not invest in the United Kingdom. All my stocks are from America, bar maybe one or two. Nvidia recently hit $4 trillion. First company in the world to do so. Big up to Wall Street Trapper for the notes. Blockchain backer. Stop saying Stop saying Stop saying Blockchain backer, the greatest technical analyst on YouTube for free, does a free show every Wednesday called Markets in the Morning. I try tuning to this either live or catch up by the end of Wednesday. And he basically said in this video, the markets can spring up at any moment. And they shortly did. There's something called the crypto breadth. I provided the link here. The link is datarapper.dwcdn.net and then these numbers afterwards. This is basically a measure of basically the percentage of Binance coins above their 50-day moving average. So right now, there's 85% of Binance coins that are higher than they were 50 days ago. That's what they mean by 50-day moving average. Just the total closing price of an asset in the past 50 days divided by 50. So this is a bullish sign. The altcoin season is around the corner. Ethereum, according to Glassnode, that are a dataset provider for on-chain data, ETH just flipped Bitcoin in 24-hour futures volumes. So that's predicting on the future price. More liquidity in the market. Okay, so that's tweets from Blockchain Sensei. I would like to actually repeat a tweet that is timeless, so timeless, I'm going to retweet it again. I said this in the last webinar, but I want to say it one more time. By Professor Michael. The markets and life are not separate. The markets are the best reflection of human emotions that we have anywhere on the planet. The collective mind of humans all across the globe is exposed through financial markets. The purest expression of what the world is thinking and most importantly doing. Because everybody can say things, but who and where is putting their money where their mouth is? I posted this 5 days ago. ETH looking bullish on the 4 on the 4 hour. What was ETH? ETH was 2.6k on this day, and I was having some nice food with my wife, doing some TA. What else? I scooped some Lucky Coin. Basically, Bonk, which is the biggest meme coin on Solana, pretty much the official meme coin for Solana, which I see as like an Ethereum beta. They have their own launch pad now, and one of the coins that launched on the launch pad was a coin called Lucky Coin. So do your own research. I'm still in this. Okay, we're down to 3.8. This is a super new narrative. I'm not getting paid to say this, by the way. This could absolutely go to 0. This is gonna go to 0. I just have a little trade on this. Okay. Big up to Crypto Likes. He's really great. He posts some good Instagram stories as well when it comes to DGen stuff. I found a platform for people that wanted to do peer-to-peer fiat to crypto. If you got Revolut, it's called ZKP2P. One of my mentors uses it. If you're in Europe, you can use spherepay.co. Electric Capital, who I have reviewed reports for in the past, they are a early stage venture firm, so they invest in blockchain companies, and they also provide data. They did a report on beyond stablecoins, the case for Ethereum, and it's basically a huge bull case for Ethereum in the sense that, you know, we have all this money flowing in crypto. I think we could hit $10 trillion this cycle, which could go as long as mid 2026. And we have this unlimited money printer, or almost semi-unlimited money dollar printer, which is being filtered into crypto via stablecoins. And essentially, more and more of the network of Ethereum just needs to be bought by institutions to keep the network up. That's the basic argument and basic ultra bull case for Ethereum. Okay, so that's enough. Well, almost enough Twitter. Before we read up on Thomas on markets, best guy to follow on Twitter, especially when it comes to liquidity. Let's have a look. Systematic buying of US stocks is heating up. 3 months realized volatility continues to collapse. So volatility control funds just to continue relentlessly bid stocks under any circumstance. Billions and billions of buying. Buying will accelerate this week and next week. I won't break down this chart. He's basically doubling down on what he said earlier this month about an avalanche of cash. An avalanche of cash set to be injected into the market. Okay, let's move on to some on-chain metrics. This is charts.checkonchain.com. And then I like to have a look at the dark mode. You can look on light mode, but dark mode I just prefer. So let's have a look at some indicators. I like to have a look at this one here, the topping price model. This one here, the MVRV, supply, PR, and then if the Z score is telling me anything. Okay, so go here, P&L, and then you get the short term. Oh, wait, sorry, not that one. It's this one, supply. Okay, so what this is telling me, the short term holder supply and profit and loss, is Bitcoin holders in profit or loss in the past 25 days. Sorry, not 25 days, 155 days. Usually, when it's in the yellow or trending upwards from the red, is a buy signal. I can actually see here that I expect this to cool off. Not necessarily Bitcoin to crash, but to cool off at some point. Don't know what this is saying. That's confusing me right now. Again, short-term. Don't be overly surprised if we see some kind of short-term correction, because remember, it's not up forever, right? It's not up forever. As you can see here in this topping price model, which was a good indication of the top in December 2024, March 2024, and also the previous tops of the bull market were very far from this topping pricing model. Okay, let's go into technical analysis. So this is something that anyone who's interested, well, everyone should really be interested in macro. because the macro is the one that tells you when it's time to play the game in the casino, which is pretty much now, when to be risk off and take your chips off the table. Let me take the ADX off. Okay, so before I used to only look at the SIXRE at the top of my watch list, which is kind of like a global real estate indicator, but more formally tracks the performance of real estate companies in the S&P 500. Now, what I can see here is that this has been lagging in terms of like S&P's at all-time highs right now. However, historically, this followed the S&P 500 very well. It literally topped around the same month. Wow, look at that Dogecoin advert. It literally topped around the same time as the S&P 500 in the previous cycle. Over here, basically, like this time period here, right? Around the same time, and it dipped as well, the same. But then ever since the S&P 500 has been soaring, and this has been kind of like meandering and lagging. The way I see it is that when this really shoots up, and this kind of ties in with the theory of like, unfortunately, some kind of big recession in like 2027 and the housing bubble popping. Hopefully by then we've all made significant amount of money, right? My basic theory why I watch the SIXRE is that I believe that when this starts really charging up, that's when we're going to start seeing a real bull market. And I do believe they're going to, even though they've decoupled the SPX, S&P 500, which is obviously this is super crucial for us as crypto investors, right? Because Bitcoin is basically leveraged S&P 500. Anyway, yeah, I'm just waiting for this to supercharge as a super bullish catalyst. But I've also added two more real estate indicators, which is the RWA and this REIT by iShares. And without going into all of them, as you can see, they pretty much line up around the same. So I'm just watching these three and waiting. Is there, do we set some technical higher highs? Is there a catalyst for a real estate boom? And that's where we're really going to start seeing a lot more liquidity into risk on assets. So this is why I take a look at these three. Something to also be aware of is the ratio between Chinese yen and the American dollar, right? So when it costs more and more Chinese yen to buy the dollar, it has typically, well, historically speaking, has marked the two previous bull markets, right? January 2017 to January 2018, Bitcoin soared from I can't remember the exact price. I think it was like 3,000 to 18,000. Was that it? Oh, like 1,000 to 20,000. Okay, that's pretty crazy. Yeah. And then the previous cycle before that was obviously like COVID to the end of 2021. As you can see, China just started doing a super print and debasing their own currency by 10%. Right. What I'm waiting for here is that I'm waiting for this to start building momentum, which I'm assuming is going to be in line with all season. Okay? All season around the corner, but not quite yet. Actually, no. I'm going to need. Can I get my lines back? Yeah, I got my lines back. Perfect. So yeah, I'm still watching for this to grind upwards. Again, basically this grinding upwards equals all season, historically speaking. Okay, let's have a look at the DXY, the strength of the dollar. Now, I wouldn't be surprised if the dollar actually goes up by a little bit and the market takes a bit of a pullback. Do not be surprised. But overall, I'm expecting this to trend down. Remember, This was the previous bull market. Oh, sorry, not here. This is the previous bull market. Okay, all of this here, this drop. So I'm waiting for this catalyst here. Dollar getting weaker, Bitcoin getting stronger, basically. And then ha hee hee for all coins. Oil, we're just sliding sideways. Don't really know what to make of oil right now. Gold is due its correction at some point. It seems to just be climbing higher and higher. But I do believe gold is maybe even this year gonna fulfill these prices, like sub 3,000. And then understand that this 20% drop in gold is if you put that in trillions, market cap of gold. I think the market cap of gold right now is like 30 trillion. What is the market cap of gold right now? Okay, 22 trillion. So this drawdown here of 20% is like $4 trillion. If that was put into Bitcoin, Bitcoin would go to 300,000. That's what that candlestick means. No, I'm not saying this gold goes to here and then Bitcoin goes to 300K. I'm just trying to make you aware of like the money in these candles is trillions. Does that make sense? Because of the size of gold, which is like 4 times bigger than crypto. Silver on the rise. In my opinion, silver to $50 probably by 2026. Let's look at Circle, one of the newer crypto companies on the stock market. I'm kind of still trying to find an entry on this because I missed this huge wave. The entry price for Circle, if anybody wants to write it down, is $132. If we grind our way here, it might take us 6 months or whatever. This is my buy price. Again, Tesla, I'm out of Tesla. Don't know what to make of it. Elon starting his own party. Historically speaking, nobody outside the Democrats and the Republicans have actually won a election. Anybody want to load up on a long-term stock? Snapchat is one of my ultra picks. This is super high from the high. I don't know when it's going to snap up. Basically, if it goes back to the 2021 high, this is like 9x. But who knows how long this is going to take? I don't fucking know. But Snapchat is a bargain. Coinbase. Okay, so this is why I'm bullish as hell on the base chain, right? Coinbase, the only centralized exchange on the stock market, is at these disgusting highs. Disgusting highs, right? So the money's going to go in base chain at some point. What is the base chain? The base chain is Ethereum layer 2. So think of a network built on Ethereum. And it's owned by Coinbase. Right? So this is why, as of the past few webinars, I've been looking at Coinbase assets, which we will look at very, very shortly, actually. Very shortly. In fact, let's just go straight to it. Look, this is my, not this. Yeah, this virtual AERO BRETT TOSHI Miggles is my base and AIXBT, my base ecosystem bet. Take a long, hard look at Coinbase stock. This is the money. There's billions of dollars in the Coinbase stock, which is in what? The NASDAQ, the top 100 US tech. Okay? Billions in Coinbase. You can go to a website called DeFiLlama.com. Give me a second. Okay, so DeFi Llama, it gives you stats on basically how much volume, how much money is being locked up. So right now, there's only 127 billion locked in DeFi, right? The most money ever locked in DeFi is $176 billion in November 2021. And this was when the market cap of crypto was quite a bit smaller than it is today, about 3 trillion. Now crypto's going on to 4 trillion. So there's a huge disparity here. Now, one of the chains that's gaining a lot of value locked up on it is the Base chain. So we've got the Coinbase stock at all-time highs and Base chain at all-time highs. Whilst all the value in crypto is not at all-time highs, meaning that it should peak back to here. Right? So I'm looking at the best coins on Base. The first pick, and let me show you guys the easiest way to look at the Base eco. You go to coinmarketcap.com. Pardon me. You go to categories. For those that are new, coinmarketcap.com is the #1 website in the world for cryptocurrency information and data. #1, not as the best. It is very good, but I mean most visited, right? So I don't know why that's taking a while to load, but let it load. And I'll show you how to look at stuff in the Base eco from CoinMarketCap. But as we're live, let me just tell you, virtuals, this is the #1 coin on the Base chain, right? And as in, out of all the coins built natively on the Coinbase chain, this is the #1 coin in terms of market cap. We all know Ethereum. Wait, he's entered the room. Oh, meow. I think this is my wife. Oh my God, is that my wife in the Zoom?
Hello, assalamu alaikum.
Hello, assalamu alaikum.
Walaikum salam.
What's going?
How you doing?
I'm good. I'm so sorry that I came in
I'm
late.
good. I'm so sorry that I came in late.
It's all good.
I'm with Cider right now.
I'm with Cider right now.
Yeah, that's okay. I might be talking about a lot of complicated stuff because I did like the more beginner friendly stuff at the start.
Okay.
Hopefully
Who
she'll
joined?
something. Yeah.
Who's joined?
We've got Toby. Do you remember Toby the chef?
Hello, Toby. Toby the chef. Yes.
Toby the chef. Yes.
Yeah, he's got a pudgy now.
And then
We've got a pudgy now.
yeah, we do. And then we've got Krog in here, and we've got Alien, and we've got Donny Storm, the rapper.
Okay, nice to meet you, everyone.
Nice to meet you, everyone.
Well, anyway, guys. So, what you guys want to do is, we all know Ethereum's going up, right? We all know Ethereum's going up. So, what we want is we want to. 1 second. All right, so what we want to do is that we want to look at assets that have performed with Ethereum. So virtuals, we can see that this high here from the 4th of January pretty much aligns with the Ethereum high on the 8th of December. I mean, we could take it down to like 8th of December here. Right, so we can see that Ethereum topped and virtuals continued up to like January. Okay, so give or take, it had a similar high, right? And then the low is pretty much at the same time, 10th of April. The difference between virtuals and Ethereum is that ETH is 35% from the high, and virtuals is what? 3x from the high. I don't know why CoinMarketCap didn't load. Okay, so yeah, that's virtuals. Then we've got AERO, which is the biggest liquidity provider. Again, similar highs to Ethereum. They're pretty similar highs. And then this is a pretty similar high as well from April. And yeah, the same low as well. Bloody hell. That's good, isn't it? But the difference between Aerodrome and Ethereum is that Aerodrome, back to its highs, is a 2.5x. Then we've got Brett. Which again has similar highs to Ethereum, similar lows. I guess this high didn't quite match up. But yeah, back to the high here. That's a 4.2x. And then my biggest bet is on Toshi. Can't lie. I have loaded the boat in Toshi. And I'm trying to basically do a refund trade back to the 10th of May highs, which is like 70%. So I'm in like a four-figure spot trade in Toshi as of the past 2 days. Then we've got Mr. Miggles, which, again, basically all these base tokens are printing or painting a similar picture, right? So whereas Ethereum peaked like here, okay, Miggles front ran Ethereum. So Ethereum was here. It front ran it a little bit on this pump. Will it front run Ethereum again? Possibly. Possibly back to this high. Right, that's like a 4.7x. So have these on your watch list. Virtuals, AERO, Brett, Toshi, Miggles. And then you can look at base ecosystem here. This is the easiest, in my not financial advice opinion, to make gains this year. Yeah, you'll find them here. Unfortunately, it shows you non-native base tokens. So Shiba and Bonk, yes, they have liquidity on base, but they're not native to base. SPX, which is Murad, the meme coin guy, that's his top pick. But yeah, Virtual's biggest coin on the base chain. Then we've got Mog, the meme coin, Aerodrome, which is a utility coin, Morpho. These guys actually let you invest in the stock market, but on chain. So they were ahead of Solana. And then we've got AI XBT. Look, more important than kind of getting lost in the narratives of these coins and what they look like, break down the chart and look, historically speaking, when you backtest, historically speaking, how correlated are these assets together? And you will find that when you backtest, under the eyes of the hood, under the, past all the news articles and what he said and she said, you'll find that a lot of the puzzle pieces match up just in technical analysis. Anyway, let me go back to the watch list, have a look at some important things. Let's have a look at Bitcoin. All-time highs, happy all-time highs. See here, in 2020, we had 1, 2, 3, 4 positive quarters. Here we had 2 positive quarters, 2 positive quarters, 2 positive quarters, 2 positive quarters. I think we could be in for a 3 or 4 positive quarter Bitcoin 2025 run, especially with all the compression, because remember, this has been an institutionally driven spot rally. This has been the first rally that hasn't been retail driven. So I'm going to do some longer analysis. Okay, let's change to the monthly. Everything looking bullish for Bitcoin. We've even on the 2-week just had a crossover on the RSI, purple over yellow. And we've got some flashes of bullish signs on the 2-week, and then we've got my crossover as well. So yeah, everything's looking good for Bitcoin. Now let's have a look at Bitcoin dominance. Now, for those that don't pay attention to this, this is what's going to tell us when the alt season is. Right now, Bitcoin is 64% of the market. What happened at the start of 2021, all the way to the end